We are on day number 13 when it comes to follow me on Binance Coin. We've been triggered into a short trade. We're going to look at what we said yesterday, what's happening now, how we can tighten our stop losses based on logical thinking and business decisions and not be emotional about it. So if you like today's content, like, subscribe, hit the bell notification because we're already on a 2x for my risk reward ratio. My name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro, featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on crypto. So let's dive into BNB. All right, so yesterday what we said, very logical, very mechanical. We said based on all of our conditions, we can go short below this low, and we'll put our stop loss up here. So this is our short position, we'll just write short. And this is our stop loss, SL. And if we get triggered in, we're going to risk 3% on this trade, right? That's what we said. And we set up the orders. We use a futures platform. There's a few different ones you can use. And that's what we're going to look at today. So let's dive into a live chart because we've been triggered into the trade. It's looking healthy. Check this out. Bang. All right, let me just get rid of these lines. All right, boom. All right, so we've been triggered into this trade very nicely. So today we're going to look at is what action do we need to take, because this is live data, what's likely to occur, what new information do we have. Now, before we do, I'm going to read a quote from my book. I normally read them at the end, but it's also relevant that this is the practical guide. We'll loop it at the end as well. Warren Buffett says, rule number 1 is never lose money. And then rule number 2 is never forget rule number 1. So how can we manage our stop loss in a mechanical, non-emotional, logical fashion based on the information at hand? Because a lot of people would actually just kind of start taking profits, or, it's a good movement to the downside from here, but it's too soon. So what new information do we have? Okay, first we just need to accept the worst case scenario, because we can only do probabilities and never certainties. So what's the worst case scenario? That from here, the market just goes like this. If that happens, which is possible, not highly probable, but possible, then we lose 3%, right? Without doing any adjustments. Let's just say it happened in the next hour, bang, we lose 3%, and then we just look for other high probability setups in Binance Coin and be patient for the next setup. But what we're going to do now is it's unfolding as anticipated. Because what we said yesterday was this looks like a wave C top, a wave C over wave 2. Is broken down to these 5-wave structure. If we go below this low, it's the first signal. Now, how I like to think of signals is you're driving a car and there's a car in front of you. And the car in front of you puts the indicator on to turn right. And that indicator is now flashing and it is signaling that it's going to turn. Right? So that's our first signal. The ultimate turn, when the car actually turns, is actually the price going below this wave B low. Has it closed below here? Now, I think it might have just tagged, I might have gone just below it. Yeah, it's gone actually below it. It's gone just below it, which is a good sign for us in the sense of we want the market to go down because we're shorting this market. We're making money as the market goes down. So this is now a confirmation. Ideally, we want to see the price close below this low, which it hasn't done yet. Ideally on a daily chart. But at least on a 4-hour as well. We're looking at a 4-hour chart right now. So this will be our first major confirmation, and then below here will be a stronger confirmation as well. So what new information do we have that we can look at? So let's just jump out of the 4-hour chart and jump into a daily chart. So I'm going to jump out of this, and in my top right hand corner, I'm going to jump into the daily chart. Now I've just got the stochastics RSI, and we said this really, really clearly the other day. Yesterday, it looked like this, where we're still pointing upwards. And what we said is pattern, price, and time, Fibonacci time, especially time as well, is a really, really strong factor, overrides momentum. And if you've got the experience, we know one big down day is going to flip the momentum to the downside, because what momentum does, it just measures rate of change based on the historical data. So what we said was, okay, even though the daily momentum is pointing up, it's only going to take one down day for it to flip around, and we're probably going to see that reversal. And that's exactly what's happened, right? We've now got a daily bearish reversal, and now it's pointing downwards. So that tells us we're highly likely to see 1, 2, 3, maybe 4 or 5 days of sideways to down for BNB to really go towards that $200 mark. And if that's the case, that'll be a very highly profitable trade. So we got that new piece of information, which is good for the short trade. What other information do we have? Okay, so when you're managing your stop loss, I like to have my position in two parts. So let's just say you've bought, let's just keep it simple, let's say it's $1,000 in this position. We're going to split that into two and go, unit one is our insurance, it's $500, and unit two is our profit-taking position, which is also $500. So in the first half, what we're going to do is we're going to ask ourselves the question, what should the market not do if it's to unfold to the downside further? So what can we deduce from what we're seeing right now? So I'm just going to jump into a line chart. So if you're not used to looking at charts, the little dash on the right-hand side, these are closing prices. So when I go to a line chart, it just shows me the closes, all the closes. So if we look at this from an Elliott Wave standpoint, what does this look like? Well, it looks like some type of wave 1, some type of wave 2, a pretty aggressive, impulsive wave 3, maybe a wave 4 occurring, and then a wave 5. Okay, is that going to be the case? We don't know, but that's what it looks like. That's what it looks like. So what should the market not do? Well, if you've taken my Elliott Wave courses or the Masterclass, one of the 3 key rules of Elliott Wave is that wave 4 should not trade into the range or the closing range of wave 2. And by the way, you just saw the bar move is because it just hit 9 a.m. and the next bar just unfolded. This is, it's a 4-hour chart. So the price shouldn't go into this range, right? The closing range. I like to use closing range for this. We can say the swing, but it's better to be just a bit more conservative. So what we can do, I'm going to go back to the bars again, is this is where our stop loss is at the moment, up here, all the way up here. So remember, rule number 1, never lose money. So ideally, we want to get our stop loss to break even, but we don't want to do it too soon, or we don't want to do it too soon. So what can we do in a logical, mechanical, non-emotional way? Well, on the full position, on the insurance position and the profit-taking position, we can actually move the stop loss down to the wave 1 close, right? So it doesn't eliminate our total capital exposure, but it almost reduces it by half. It almost reduces it by half because before our stop loss was all the way up here, and this was our risk. And now this is going to be our new risk. You go into your platform, edit your stop loss, and move it down. So now in the worst case scenario, if the market does do that, rather than us losing a full 3% of our entire account, we'll probably only lose 1.5%. So we're now doing trade management. Very, very powerful, very strong, but it's very logical at the same time as well. So now let's just finish up. Oh, by the way, if you're not familiar with the 3 key rules of Elliott Wave, one of which we just discussed, wave 4 should not trade into the range of wave 1. If it does, it invalidates the count, and it means something else is occurring, and we need to review the psychological mood of the buying and selling behavior. In the description below, in the YouTube description, if you just pop in and go to the description, you'll see a link that takes you straight to my masterclass, and I cover the 3 key Elliott Wave rules, as well as some of the key ratios that apply to Fibonacci and Elliott Waves and how you use them in conjunction. And that's what we're doing with the Follow Me. And we're on day number 13. We're on day number 13 with BNB, a nice trade setup. We're not out of the woods yet. It's not totally risk-free. I like to get risk-free in a mechanical way. You want to have a business plan. And what my business plan allows me to do is reduce the risk to this point. And if the market unfolds further, then we can review. But remember, just a loop. Top right-hand corner, the daily chart, the momentum is bearish. So that tells us we shouldn't get overlapping waves, and we should get an impulsive sequence to the downside. And that's really, really powerful, valuable information. So now let's just finish up on a couple of things. What should we anticipate? Now we said this a few days back, but we're just going to loop. Repetition being the mother of all skill. We can delete some of these lines now. We can go, okay, that's been confirmed. That's helpful for us to know. What's the key first ratio that we're looking for? Well, it's this zone down here. This 100% of this wave, what we're calling a wave 1, projected from here is this low down here. So if the price unfolds in this range, we want to be highly aware of that, highly aware of that. And then if this 1, 2, 3, 4, 5 kind of structure unfolds like this, something like this, we're going to be very on high alert to be taking profits in this kind of zone. And we'll talk about it as it happens. And if this wave 4 becomes really clear and it does unfold like this, and then the market does this, we will move our half, the first unit. Remember we said we split it into two. We're going to move half the insurance policy stop loss from where it is there to above this swing high. And what that will do is two things. One, it will lock in a small profit. Nothing to write home about, but small profit is better than break even or a small loss. Because if you're making a small profit every time you're wrong, then you can just keep playing the game and playing the hand until you're right. And the ones where you're right, it can be a very significant move. So first objective is insurance. Yeah, let's not get too caught up on profits right now. We've got a capital exposure still. We've reduced it because we moved our stop loss. But now we're looking at, okay, what can we do and what should we anticipate? So what we're going to anticipate is the market moving down towards this zone. It's highly probable, but not guaranteed, right? Highly probable, but not guaranteed. How are we going to then address our second stop loss, our second position? Well, if we do end up seeing the market do this movement here, and we move our stop loss here, on our second position, so what we're going to do is we're going to go on our first position, we'll move it to the swing high, and on our second position, the profit-taking position, we'll move it to break even. So in the second position, you want to give it as much room as you can in a logical manner, what the market shouldn't do, but there'll be no reason if the market goes all the way down to here, there'll be no reason to still have capital exposure. So then we've guaranteed profit. Half of our position is break even, and then half of our profit will be a small profit in a small profit position. So what it means is if this unfolds like this, but it ends up doing this, we make a small profit. That's good. That's phenomenal. Where most amateurs would lose money, we're making money, right? But that's not what we're playing for. We're not playing this for a small profit. We want the big profit. So what should we anticipate? All right, if it unfolds as anticipated, what should occur? Well, if this is some type of five-wave structure to the downside, it's probably going to unfold further to a, it'll be down, up, down, and it'll probably get to this region. And on a slightly more macro degree, if we do get a clearer pattern, then on our second position, we at least want to give it enough breathing space to get into this. Now, there'll be clear swing highs, there'll be momentum reversals, there'll be a few other things if it does unfold like this. And that's where we need to make some logical judgment calls. Now, we're in the business of trading here, and we're going to need to make business decisions. And right now, we don't have the information, so there's no real point going over it in much detail. But what I can tell you is what we're anticipating. If I just let me just get rid of this for a second, and we'll just get rid of these. What I am anticipating is on a slightly more macro degree. Let's just call this, we're anticipating something like this, maybe something like this. Now, if it unfolds something like this, we will be moving our stop loss down here. And if it goes down, up here, and if it is a clear five-wave structure like this, then we're going to really tighten our stop losses and really get tight to the market and look. So if we get our stop loss here and then the market moves further down and then moves up, we would have captured a lot of the profit. We would have captured like all of this profit to the downside. And, we're talking about, 4, 5, 6x risk reward in the sense of we risk 3% to make 15, 20%, thereabouts. We'll get the numbers. There's no point in speculating because we haven't got control over that. What do we have control over? Well, we've done one thing so far new today. We've adjusted our stop loss just by half, just in a logical manner, is on the closing price of a wave one, what looks like a wave one. We know that the daily momentum is now bearish. That's a good sign for shorting. And that's it. There might be some other opportunities to enter this as the market unfolds. We might get stopped out, and then again, we'll just look for other opportunities. But it's important to know what we know and what we have control over, and what we don't know and what we don't have control over. So if you like today's content, like, subscribe, hit the bell notification, because this we're just doing day by day as it unfolds. Do we know how it's going to unfold? No. It's probabilities, never certainties, but we just stack the odds in our favor. Fibonacci time was an absolute key player in this analysis, which we touched upon a few days ago. And now we're just patient. And by the way, we're only looking at the chart once a day. Once a day. I did look at this a second time yesterday, but the only reason was someone in my private Telegram group, people that have bought my courses on private Telegram, messaged about the trade going the way we anticipated, and I thought I would just have a quick peek. But normally, just do once a day, log in the morning and see, right, do I need to take any action? That's it. And then we'll do the same. We'll let a 24-hour period, 6 bars on the 4-hour chart, 1 bar on the daily chart, 24 hours, let it pass. We'll just review and go, right, is there anything that we need to do based on logic, based on our trade plan, based on our business plan? If yes, we do it. If no, we don't. Sometimes it might be even we want to set a price alert. So sometimes there might be some movements in the day that's quite sensitive. So if that's the case, we can set a price alert. If that gets alerted and we get an email or a push notification, then we can jump on the screen. So take the Fibonacci and Elliott Wave Masterclass is in the link below. I cover a lot of this. What we're covering here, pattern. We cover the key core concepts of pattern and the guidance and the 3 key rules that you must know on Elliott Waves, and the key Fibonacci ratios, especially the wave 2 retracements and the extensions and the ABC corrections. They're very common. The most common correction is an ABC zigzag. And we cover that a lot in the masterclass. So if you haven't taken that already, so today is day 13 of the Follow Me on Binance Coin. And it's unfolding, just textbook, right? But we don't know in advance. And it's okay. And in fact, it's paramount that you don't know in advance, because that's the whole name of the game. And that's the key to success. So like, subscribe, hit the bell notification. Let's finish on that quote. Let's loop it again. Can you remember what it was? Because we did the practical guide of this quote, because quotes are nice, but if it's just regurgitated information, it's just intellectual. We want it to be actionable knowledge, which helps us make money, lock in profits, and we can use that guidance and that analysis to see the technical position that helps us a lot. So the quote of the day is Warren Buffett. Rule number 1, never lose money. Rule number 2, never forget rule number 1. Today, again, is day number 13. So we've been following, tomorrow will be day number 14, which will be 2 weeks. And we've only had 2 trade setups in 2 weeks. So we took the first one. We waited 3 days. There was a setup. We took it. We made some really good profits. We got stopped out in some logical positions. Then we were patient for a few more days. And there was another high probability setup. We talked about that yesterday. And we got triggered into it between yesterday and today. And that's 2 weeks, 2 trades. So we're not over trading. We're not trading junkies. We're not just getting into the market for the sake of it. It's patience. And patience is one of the key ingredients to success. Is to only take high probability setups based on your time frame and your business plan and your trade plan. So we identify the trend. We become friends with that trend. So the trend is your friend. Ride it until its end, until it reaches its bend. So we probably got 3, 7, maybe 9 days before a potential end of a major trend on the downside for a major correction. But we're just taking advantage of the information as it unfolds, because it's quite logical and quite obvious when you get used to using Elliott Waves and Fibonacci. All right, I'll see you tomorrow for day number 14. 2 weeks, day by day. We're just following it, and let's just see how it unfolds. All right, I'll see you tomorrow. Take care.